Good morning, I'm Chris Peach and welcome to Charting the Markets on IG Live. And welcome, of course, to Thanksgiving Day. Happy Thanksgiving to any Americans that may be watching. And, of course, we Europeans have to manage without US markets this afternoon. Americans off on holiday today. A half day in the US tomorrow as well, so don't forget that. IG markets will be open for this morning for the US, but will be closed this afternoon, and then will be open for the half day tomorrow. So do bear that one in mind. In the UK, we continue to digest the impact of yesterday's budget announcement, looking through the impact for the likes of first-time buyers. Not really much movement in the pound so far this morning, heading towards key resistance. We'll look at that in a little while. Last night's Fed minutes arguably having the bigger impact on financial markets, really continuing to drive the US dollar lower, having some interesting impacts as a result across the FX space. We've had, again, more strong PMIs from the Eurozone. The Euro boom continued on the continent. Some unfortunate comparisons, of course, there with the UK economy as a result. Although UK GDP, once again, 0.4%, the most recent reading, unrevised, that coming through this morning. Early bath for the FTSE 100 and for the DAX, seeing some weakness as we started the session, but once again repeating the pattern earlier from earlier in the week, where the early dips do tend to get bought. Over in Germany, coalition talks or potential coalition talks go on. The SPD leader really being pushed into trying to form some kind of grand coalition in order to give the Germans a government. The question is, will they actually get this done, or do we face the prospect of a second snap German election? Looking at the indices space this morning, the FTSE 100 currently trading at 74.07, once again doing its best to recover. And you can tell it's the Thanksgiving period and that volume has dried up, because look at these two candles we've had on the FTSE 100. Yesterday's candle, we were all the way up 74.60 as the budget was being announced, and then afternoon sell-off all the way back down to just, we closed actually above 7,400, but the futures then continued lower. So a really interesting candle, really close to the lows yesterday, and then today all the way down to 73.70 and then back up again, and we are rallying as we speak. So very interesting performance thus far. In terms of potential trade for the next few days, of course, it is volume light, so you might get quite a bit of random movements, some volatility, lack of US drivers, lack of fundamental drivers here as well. But the dip down, I think what we've learned over the past week or more is that the dip towards 73.50 has brought out the buyers. So that sharp drop from near that record high, we almost got there at the beginning of November, up towards 7,600. Dramatic pullback took us back to 73.50, and that has been staunchly defended over the past week. Not a bad performance at all. We're back above the 200-day moving average. It's a classic thing. Everyone thought the FTSE would just continue to pushing up in a straight line, and then it caught us all out with that sudden, swift drop. If you look at the hourly chart, you can see this is the big zone of support that's been holding all the way through the past week. And again, the buyers really stepping up to defend this one. Interestingly, for the fans of moving averages, there's your golden cross on the hourly chart. And you can see these always tend to take place with stochastics relatively overbought, because don't forget, moving averages, of course, like every indicator, are lagging. There was your sudden dip, providing a nice, neat buying opportunity, and it's continuing to move higher. So really, we're looking now to see whether we can rebound, push back towards 74.60, and then that tends to clear the way for a return towards 7,500 and then up towards this important zone here around 75.50. If you remember, back in mid-October, we were talking about this level. This area rather, that stifled progress. Really, it did the same thing at the beginning of November as well. So that's your zone to get above, and then 7,600, the record intraday high from June, and then above there, the index finding its own new record highs to follow on from what we've had in the US, which appears to record new record highs on an almost daily basis. And the DAX also doing its best to rally off the lows this morning. Not quite as spectacular, but you can certainly see that as we had 73.60 for the FTSE 100, for the DAX, the zone down towards 12,844 is where the buyers do tend to step in once again. So this was defended last week. It looks as if it wants to now hold above 12,954. That's the previous high from earlier in the summer. And we're just seeing whether we can now begin to create another new higher high. That's certainly what we had at the beginning of yesterday's session before this sharp sell-off. took us back down again. But indices in Europe doing quite well, actually, really, to recover. Other European indices like the CAC 40 also beginning to move higher as a result. So we're only still, for the DAX, don't forget, about 500 points away from that record high from the beginning of November. It could really do that within a very short space of time. Again, its seasonality suggests further strength for indices heading into the end of the year. So I think we're still on watch to see these recent highs broken in due course, and the equity rally taking another leap into the unknown, into new record highs as we move into the new year. Moving on to the FX space, the euro once again under pressure slightly this morning, doing its best to try and break through what has been significant resistance over the past month or so. Good few gains really for the euro the last 24 hours or so. Fed minutes really putting a lot of pressure on the US dollar. So we're now back at 118.40. You can just see, though, if we go to the 4-hourly chart here, the bulls now have to be careful because they are really into this tough zone of resistance that has held since mid-October, 118.60 and then 118.80. Well, really, that's the area to watch for. Unless we get a breakout above there, then the risk is that we see a move back down again. There's a short-term downtrend you can see here on the 4-hourly chart from that 15th of November high, and that's been broken. So that downtrend line broken out. We're pushing new highs, new higher highs, at least in the context of that downtrend. But really, that hasn't changed since the middle of October, and we need to get a close above 118.80 to confirm that actually we have a new higher high in place for the time being, and that we might continue to push on back towards 120 or 121. The ECB, really saying that we're expecting no change in policy until the early months of next year, whereas we had been expecting something in the next few weeks. So once again, this market is now moving on momentum. And that strong Eurozone PMI data this morning really giving further impetus for people to buy back into the euro. And that's having quite a bit of a downward impact on European stocks, which explains why the DAX took such a knock yesterday. But it doesn't change the overall outlook for a stronger rally for that index as we head into the end of the year. For the moment, the euro just under a bit of a problem, really, trying to break above this key resistance that you can see at the moment. The pound, tremendously unmoved, I think it's safe to say, by the gloomy forecast from yesterday's budget. You would have thought that the big downgrades to growth forecasts and productivity outlook would put a bit of a downer on this pair. But no, that was not the case. Just as the pound was really beginning to get up ahead of steam to the downside, those durable goods orders came in and pushed it higher once again. You can see this on the hourly chart here. In fact, it's barely even recognisable. That there was the budget, and then durable goods came in, and off we went to the races to the upside. Now, for the time being, this steady rising trend is still in effect. On the hourly chart here, you can see a sequence of higher lows coming through all the way, and then higher highs as well, quite nicely. So yesterday's high up towards 133.40 is the one to watch out for. Again, this strong March rising trend continues to provide a fundamental underpinning for this move higher. Back above 133.40, and you're on to 134.30, the highs back in last October, and then on towards the September high at 136.60. Been a very good performance for the pound, as long as this rising trend line continues to hold. And even then, really, we need to see it back below this 130.50 zone that held as support all the way through October and November to start getting particularly bearish on the outlook for sterling. And those Fed minutes really causing another rout in dollar-yen, which has been trending steadily lower since the early part of November. And if you look at the hourly chart here, you can see that rallies, intraday rallies, continue to be firmly sold every time. It's been working quite nicely. These combination, either stochastics or MACD, showing broadly the same thing. Price rallying, being knocked back down again, rallying and then knocked down. So lower highs and lower lows all the way through. Just a bit of consolidation now for the pair after that steep drop yesterday. But the problem for dollar bulls, which had seemed so strong just a few weeks ago, 112.72, all the way back there, and then the selling could resume. So watch out for that, and that declining 200-period moving average as well, providing a good area for potential sellers to step back in again. It looks as if the 111 level will be tested in due course, even down to 110.11, which was the key lows from earlier in the year. That's your next chance for major support to step up at this point in time. And then commodity markets, the weaker dollar, once again, having a bit of an impact on gold, moving back towards 12.92. The steady uptrend clawing its way higher over the past few days. That's still in effect, but as you can see from the chart here, it has been awfully heavy going for gold, down at 12.65 in the 3rd of November, just about holding this move higher. The uptrend still in place here, but now the next thing is for a new higher high above last Friday's high at 12.97. So at the moment, all these dips do continue to be bought, and I think that's the way to watch this one. It appears to be a market where buyers are still in control, helped of course by that weaker dollar. Back above 12.97, and then 13.07 your next one to look for, and then 13.37. Still a rising 200-day moving average, again pointing in the broader direction of the longer-term trend from those last December lows all the way down at 1,126. But it has been a bit of tough going to break through that 1,300 zone over the past month or so, so do watch out for that one. And oil just pausing for breath once again. It's been leaping higher the last few days. Very strong move high on the back of yesterday's inventory numbers, and that weaker dollar also really coming into play here. It's going a bit parabolic, this trend, a bit of a stretch away from the 50-day moving average and from that rising trend line. So I think you ought to tread carefully with this one. If you look at speculative data, a commitment of traders data, speculative traders now the most long they have been in history for crude oil. So watch out for this one. Everyone seems to be keen for this one to move higher, which is usually not necessarily a sign that trends are going to reverse, but can be just a bit of a red flag. If everyone's long, there's not much room to push this one higher in terms of momentum. But we are looking at 62.56, the next high. 62.60, the high level from May of 2015. That's the next one to watch out for you. If you look, we're using the weekly chart at this point just to get a sense of where we go next. Again, the 4-hourly chart really providing a nice little way of getting on board the trend, waiting for the dips. That has worked quite nicely since September, so we're just a tad overbought at the moment. Pullbacks just to get everyone nice and bearish, just as you had during the course of the last week or so, and then it's rallied once again. So you can see it's bumping its head up against $58 a barrel, where it stalled earlier in November. Potentially, though, the turning higher and a breakout from here, but could be a bit problematic while the US is on holiday. So nothing to look out for from US this afternoon. Of course, US markets closed for their Thanksgiving holiday, and they're on a half day tomorrow. Lucky them. So European markets just continue to trade without the benefit of that volume, and we'll see whether the DAX and the FTSE can continue to hold the ground they've gained early this morning and indeed recover some of yesterday's lost ground. That's it for me. Thank you for joining us, and we will see you again as normal at 10:30 tomorrow.
The new IG trading platform, fewer clicks, flexible layouts and time-saving settings, split charts across multiple timeframes and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.